Well, good morning, folks. Um, my name's Jason Potts. I'm a CPA. I practice in Maceo, Kentucky. In case you're not familiar with northwestern Kentucky, Maceo is actually a small little town outside of Owensboro, Kentucky, about 10 miles east of there. And we're about 2 hours southwest of Louisville, Kentucky, if you're familiar with that, where that is. And so I've had this CPA practice for several decades now. One thing it's kind of evolved into is helping folks understand basic financial concepts to be able to apply them to situations in their life and make better financial decisions. Some of my clients told me that, hey, you really helped me understand this. It's something I didn't understand before. You should really put out a video because you explained it very well. And if you put out some videos, that will get this information out to a wider audience. And so I've been doing that. If you haven't seen some of my previous videos, go back and watch them. And hopefully they help you, and hopefully this one does too. So if I keep doing these, and that is a plan, but you know, man plans and God laughs, right? But that's the plan, is to keep doing some of these. So if I do, when I do, the concept of net worth will inevitably come up. Now, why is that? Well, my sometimes humble, usually not, opinion is that it's an extremely important concept. Net worth, in my opinion, should be the focus of your personal financial planning. When I help anybody better understand their financial situation and try to improve it, the conversation always goes back to net worth. It always centers around that. It's very important. So that's the goal of this video, is to help you better understand the concept of net worth. What am I talking about there when I say net worth, or when somebody else says net worth? So before I explain what it is, let me explain a few things that it is not. Net worth is not your income. I've seen several examples of people with great incomes but a really low net worth. And so whether they have a lot of debt, whether they spend all their money on expenditures or whatever, you can have a great income and not have a great net worth. So net worth is not income. On the other hand, I've seen people with relatively low income have a really good net worth because they do things like avoid debt, which we talked about in one of our other videos. Net worth is not credit score. This is an entire other video, if not a bunch of videos, talking about the issues with credit score. You'll hear people brag about their credit score, say, hey, I've got a great credit score. Well, you know, that's fine, good for them, whatever. But credit score is not a measure of net financial worth. You can have a great credit score and have terrible net worth. And in fact, if you look at what credit score is simply a measure of your reliability, your proven reliability in interacting with debt. And so odds are, if you have a high credit score, you also are familiar with debt, different kinds of debt, mortgages, car loans, credit cards, whatever it is. You have played in the debt world long enough for them to say you are good at taking out loans and repaying them. So you might have a fairly low net worth even if you have a high credit score. On the other hand, I've seen people that avoid debt and have a really high net worth. Their credit score is terrible. You know, I'll leave it to each viewer to decide which of those two examples, which person is succeeding financially. Just know that credit score does not equate to net worth. Now this one's very big, and I should have started with it. You'll hear in the media, they'll talk about, gosh, who's the one now? Elon Musk. Elon Musk has a huge net worth, and you might think, well, you know, he's just a man, right? He doesn't. So what's this mean? Does that mean he's more valuable than me, more valuable than somebody else, more valuable than, you know, a quote unquote poor person? No, not at all. I want to emphasize that it is not a measure of your value. God values each of us equally. No consideration at all of financial net worth. When you get to heaven, I'll guarantee nowhere in that in the interview on your way in are you going to be asked what was your financial net worth. That's not at all what we're here on earth to do. Genesis chapter 1 verse 27 tells us that we're all created in God's image. Right off the bat, the Bible starts with that right up front. We are all created in God's image. Psalm 139 reminds us that we're fearfully and wonderfully made, each of us, each and every one of us. Uh, uh, and then Matthew chapter 10, verses 29 through 31, that points out that God values and takes care of all of his creatures, even the smallest sparrow. So, relatively to a sparrow, he measures each of our worth as relatively great. Financial net worth is not your worth as a human being, as a person. I want to state that right up front. Don't think of that. If I have a client come to me and we do a calculation of their net worth, and it's in bad shape, that does not mean they're a bad person at all. It just shows where they're at, where they're starting at, and what we need, and gives us an idea of what we need to do to improve it. Okay, with that out of the way, what is net worth? That's all the things it's not, but what is it? Net worth is just a really simple mathematical calculation. You add up all your financial assets and then you subtract out your financial liabilities. The result of that calculation is net worth. You'll sometimes hear it called net position, net assets, or just simply wealth, but the calculation is the same regardless of what somebody calls it. But when you hear me talk about it, I'll use the term net worth. Net worth, it can change over time as things happen in your financial life. So you get paid this Friday, your net worth goes up, you write a bunch of checks for bills or pay them online, money goes out, your net worth goes down. You take on debt, your net worth goes down. Your investments in your retirement accounts, the value of them goes up, your net worth goes up. And so it's changing all the time, literally all the time. And that might sound daunting, but what it does for me, it's actually promising, because that tells you that there are things that you can do at any given time to improve your net worth. You can work more, bring in more income, you can spend less, you can pay off debt, get out of debt, and quit making those payments. You can invest in things that increase in value and invest less in things that decrease in value. There's all kinds of things you can do to change your net worth. It's changing daily, it's changing constantly. And so there are things you can do to improve it. So just keep in mind that if you go to somebody and you do a net worth calculation and you go back 2 weeks later and you do it again, it's going to be different because things change that quickly in net worth. And so let me pull up a simple illustration here. I believe, yeah, that works. And so you see this the spreadsheet, and yeah, forgive me, I'm an accountant. I do everything in spreadsheets. As a friend of mine says, he dreams in Excel. Well, I resemble that remark. I do too. So I put together this illustration to help us understand a few things about net worth. So the guy on the right, he's just there. We're going to concentrate on the guy on the left, on the island on the left. And so I use the island because it's a very easy to understand analogy for net worth. Everything on this island is this guy's net worth. Anything outside of that island is not. Everything outside of the island is not owned by him. So we're the same way. Think of your financial life as an island. You've got maybe cash and hidden in the house somewhere. You've got bank accounts. You've got retirement accounts, investment accounts. You've got your real estate, your house. You've got your vehicles. All these different assets. Think of all those things as on your island. And then the rest of the world, somebody else's house, somebody else's bank account, somebody else's retirement accounts, that is on, well, you don't know where it is. It's on somebody else's island. It's not on yours. That's not included in your net worth. Just the things that are on your island are included in your net worth. And so let's go back to our illustration here. And so one thing I like about this illustration is it clears up some of the misconceptions that I hear about net worth. And so you'll hear, well, go back to him. Let's make sure we understand what's going on with this guy on the left. When he ended up on this island, he found 10 pieces of gold. You see those here. He's got 5 over here on the left side of the island, 5 over here on the right side of the island. And so down here, I've just done a quick calculation of his net worth. He's got 10 pieces of gold, 5 in pile 1 over on the left, pile 2 over on the right, 5 more, 10 pieces of gold total. That's his net worth. And so some of the misconceptions that I'll hear are that if you contribute to a retirement account, that is an expense. No, that's not right. An expense is something leaving the island. So you pay a utility bill. That's an expense. That's going off your island. Contributing to a retirement account is not an expense. That is today you paying tomorrow you, investing for on behalf of tomorrow you might be a better way to say it. But all that's doing is simply moving a piece of gold from this pile to this pile. Now this first pile has 4, the second pile has 6. You've still got 10 net worth. Now on the other side of that equation, some of my retired clients will say, well, I've got income because I'm taking money out of my retirement accounts. No, sorry, same thing, just the opposite direction. When you're taking money out of your retirement accounts, that's coming from one part of your island to the other part of your island. That is not income. That's not gold coming in from outside of this guy's island. That is simply moving from one pile back to the other one. And so neither of those are net worth transactions. So start thinking again in terms of your net worth being everything on your island, and you will understand why moving from one asset to another is not a net worth transaction. It's not increasing or decreasing your net worth. You buy, you take $10,000 of cash and you buy a car. You have $10,000 less cash. You have $10,000 more car. At least on that day. Now the car will start going down in value. Your net worth will go down again. That's why we try not to invest a lot in things that do go down in value. But on that day, your net worth effect of that transaction of buying that car is 0, simply because $10,000 went to somebody off of your island, and then $10,000 worth of car came back to your island. And so again, I just want to clear up that misconception. So now let's talk a little bit about debt. I avoid debt as like the plague. I encourage people to do that too. But what does debt do to your net worth? Well, we can illustrate it here. So this guy our guy that we're talking about here on this left island, he gets tired of eating coconuts. The guy on the next island says, "Hey, I caught some fish. I'll sell you a fish for 1 piece of gold." And so they shake hands, and this is actually, way back before credit scores were a thing. That's how you did lending. You walked in, you shook hands, and your word in a handshake was all it took to take out a loan. So the guy on the right says, "Yeah, I'll sell you a fish for 1 of your pieces of gold." Gives him a fish. Says, "I know you keep your gold buried. 2 or 3 days from now, if you happen to dig it up, just give me one of them." For this fish. And so the guy on the left, they shake hands, and that's good. So what happens there? He gets a fish, but he has told his neighbor over here on the other island, "I'm going to give you one of these pieces of gold." Well, when you incur a liability, you take on a liability, even though he's still got 10 pieces of gold in his possession, his physical possession. He does not have legal possession of 10 pieces of gold. He has legal possession of 9 because he's committed 1 to his neighbor on the other island in exchange for this fish. And so he's still got 5 pieces of gold in the pile on the left, 5 pieces of gold in the pile on the right, but he's committed to give his neighbor 1 of those pieces of gold. So his net worth is now 9 pieces of gold, not 10. And so let's go ahead all the way through with this example. And so a couple of days later, he digs up the pile on the left, and he remembers that he owed his neighbor 1 of them, and so he gives his neighbor over on the other island 1 of those pieces of gold. Now he's got 4 in the left pile, 5 in the right pile number 2. He's paid off that debt, so he no longer owes his neighbor 1 of those pieces of gold. But again, that piece of gold has gone off of his island, and so now his net worth is down to 9 pieces of gold. So, silly illustration, I know that, but if you can understand your net worth being like this guy on the left island, where things coming in to his island increases net worth, things going out decreases net worth, taking on a loan, committing for something to go out, that's as good as it actually going out. That decreases your net worth. If you can understand that simple concept about the few transactions that we talked about, that this man on this left island undertook in our example. And again, key to that is knowing that just moving gold from one side of the island to the other side, or in your case, moving assets from a checking account over to a retirement account, or vice versa, or buying a car, or buying a house, or anything else that exchanges assets on one side of your island to assets on another part of your island, another side of your island. That's on a net worth transaction. So if you can understand all of that, you have mastered everything you need to master about the concept of net worth. Now, the next videos that I put together will be talking about, among other things, increasing your net worth, and why it's important to increase your financial net worth. But you've got to understand the concept first. That's what this video was aimed at. Just a very quick overview of that concept. So if this video helped you, I ask that you like and comment and subscribe. If there's somebody you love that you think would benefit from seeing this video, please feel free to share it with them, and spread this stuff far and wide. I think that basic financial literacy is possibly lacking in our society, but definitely it's something that we could benefit from more of. So please feel free to share this. Anybody you think that it would benefit. And if you've got some specific financial concept that you would like for me to explain in a future video, just please let me know in the comments. Again, my name is Jason Potts. I'm a CPA in Maceo, Kentucky, and I hope that this video was helpful to you. I hope to see you soon.